Hello there. So as you can tell from our introduction, you might think it was Tom and Jerry, but it's not. It's just a normal line that I found, and I just made it all look neat. Anyways, so my name is Abdul, and this is my group members, as you can see. So first, we'll start off with Nicole. So as you can see, Nicole, she will be explaining to us the information we got for Google and Amazon. And I'm guessing she likes nature. I mean, who doesn't like nature? It's great. Second, we have Steven, and he likes fishing. I mean, I went fishing once before. It was great. So yeah, he will get us. He will talk about the information we got for Chipotle and Walmart. And then we have Leo. I'll just go with Leo because I can't pronounce her first name. She loves her cat, which is good. I mean, but I prefer puppies. But you know, to each his own. Yeah, she will talk to us about our what our optimal result is and what we'll go with. And then this guy, as you can tell, he loves food. I mean, great. He will talk to us about the risk-free asset, and he's going to conclude to us, give us the conclusion of our report. And then after that, we are the Spooky Consultants. This is our company. This is our logo. As you can tell, we're spooky and we're making a lot of money. So yeah, I mean, the logo stands up for its name, and we are a company for consulting for people, for clients who want to invest. And now we'll just move on to Nicole, who will talk to us about Amazon and Google.
Google is a multi-international technology company, and it is one of the most popular companies to be invested. According to the past 3 year statistic analysis, Google has experienced an overall 73.28% growth in the stock price and a 20.11% compound annual growth rate. As the most widely used website, Google products are highly connected with people's lives, especially in search engine. We have confidence with the growth potential of the Google stocks. With the popular of the online shopping, Amazon shows a highly growth potential as the largest internet-based retailer. According to the past 3 year statistical analysis, it has experienced an overall 107.92% increase in stock price and a 27.63% compound annual growth rate. Especially in 2015, Amazon's stock price has more than doubled because the CEO focused on improving financial performance and used their spare cash to buy back the outstanding shares. We predict that the price of Amazon will be continued growth in the future. All the stock statistics are from the Yahoo Finance, and the risk-free access information is from the Board of Governors of the Federal Reserve System. We use the most accurate data and professional analysis to provide a suitable investment portfolio to our clients.
Chipotle has experienced an overall 59.24% increase in stock price and a 16.78 compound annual growth rate in past 3 years. The variance and standard deviation are calculated as 3.57 and 1.89, indicating a relatively small volatility. Compared to the S&P 500 market index, Chipotle have a positive correlation of 0.33 and covariance 0.53. Chipotle's stock is belonging to consumer defensive sector. The economic cycle and the economic trend will not affect the market demand. We predict that the stock price will grow, but at a relative consistent level. Walmart has experienced an overall 0.18% decrease in stock price and a negative 0.06% compound annual growth rate in the past 3 years. The variance and the standard deviation indicating a small volatility. The reason Walmart has a low volatility is because healthy dividend policy and shares buyback. Compared to the market index, Walmart has a positive correlation of 0.49 and a covariance of 0.44. Walmart has a strong financial performance, but their return on shareholder is very low. The only growth is in August 2014. However, after a few months, it declines again. As the largest retailer in the world, we believe that the stock price will grow in future and has a positive correlation with market.
We combine the risk and the return of the four stocks to get a suitable investment portfolio. In order to get high return with relatively low risk, we get the weight of four stocks by maximizing Sharpe's ratio. We did not use the risk-free return to compare with our stocks because we are looking for a high return stock. So, in calculation of Sharpe's, we use the mean return of four stocks instead of the risk-free return. According to the data from Yahoo Finance and the calculation we did, the optimal portfolio is by 96.45% of Amazon stock and 3.55% of Chipotle stock. We decided to follow the optimal portfolio for a few reasons. First, although Google and Amazon both have huge potential in the future, Amazon has a higher return in stock in the short run. When we did the research, we found that the PE value of Amazon is 5 times of the PE value of Google. We think this is a signal that the investors have a high expected about the future Amazon stock price. Second, the average return of the Walmart is low. We do not expect that investors who are looking for high return will be interested in Walmart stock.
Okay, so I will talk to us a little bit about the risk-free assets. So we decided to go with the Treasury bill, and we got our rate from the Board of Governors, as it was mentioned above. But the only problem with it is that it was an annual rate while we're working with a daily rate, right? So right now, right in front of you in Excel, you should see at the part where you'll see the calculations that we have. You'll see how we did the calculation to change it into daily rate, and with that we changed it into daily rate, which gave us 0.013%, which is relatively low, but that makes sense because it's a risk-free, right? But in our case, we assume that the customers, they want a high return. So with a high return comes a high risk. So to conclude, our research and everything we did with this project is basically Google, Amazon, and Chipotle have relative high potential returns, right? All three stocks are high, and obviously the higher in risk. So the higher the risk, the higher the return, as we all know. Our final result, though, for the portfolio, which was mentioned above as well, it was 96.4% for Amazon and 3.6% for Chipotle. And this was the result that we got from the solver that we used on Excel. It's obviously a high return, so it includes high risk. But we're confident. The expected return of the portfolio, though, is 11.65%, which is almost twice more than the market rate. So as a professional consulting group, we have the confidence of the portfolio's potential, and it is a great choice for investors who are seeking high returns. And thank you, and that would be it for our project. I just wanted to end our video with a small clip that I've worked on, and I just want to show you how we went from point A to point B, and we're finally done this project, and it's the end of the end of the semester as well. And I just wanted to thank you on behalf of my group and me and my group. Just thank you for a great semester. It was a great experience, and I hope you enjoy the video. It's a final clip I've worked on, and hope you enjoy. Thank you.